Financial Fundamentals with KT. This information is general in knowledge and is provided for educational purposes only and should not be relied upon or interpreted as accounting, financial planning, investment, legal, or tax advice. I encourage you to consult with a professional for advice applicable to your specific financial situation. So I'll be speaking to you guys today, and I really want to target the young adults and the people that just need that financial guidance. See, it's all about getting your finances on the right road and setting you up to be more responsible and setting you up for financial success. So look at me as the guy that you met in Walmart or the guy that you met in the park, and you just having a friendly conversation about finances, all right? So let's keep it cool, calm, and collected as we discuss great strategies to help you manage your money, how you can start saving money today, and much, much more. A nice starting point will be to develop clarity and evaluate our relationship with money. And what do I mean by this? Do you value money? Could you care less about money? Or do you worship money? Do you have an abundance mindset when it comes to money? Or do you think money is hard to come across? Do you think money just gravitates towards you? Or for the young ones, do you think money just grows on trees? It's important to have that clarity and know where your relationship stands with money. Tracking your spending. To be in control of your money, you must understand your cash flow. How much money do you have coming in versus how much money you have going out? And you might have heard the saying before, it's not about how much money you make, it's about how much you can keep. And if you never heard that saying before, well, there you have it. Free 99. So, your money, where does it go? It's amazing that most people can't answer this easy question so easily. And it's common for people to spend the money that they make and not have anything left to save for their financial goals. In fact, many people say that they do not have anything to show for their hard work at the end of the month. So how can we get started on the right road to success? First, let's know your income. And do you know all the ways that money comes to you? It can be in the form of wages if you are an employee. It can be from an allowance if your parents give you that. Or it can be from other sources such as tips, scholarships, or grants. And that applies to college students. So there are two categories when it comes to income. You have your gross income and your net income. What do you think the difference is between the gross income and the net income? Well, to break it down and to make it simple, your gross income is your total income without deductions. Your net income is the cash you bring home after your employer deducts taxes, health insurance, and so on. Next, when it comes to understanding cash flow, is to know your expenses. And many people overestimate their purchasing power. They look at the total salary as the money available to spend. However, it is best to base your spending plan on your net income. Now, let's talk about expenses. Fixed expenses do not change from month to month. Typically, you do not have any control over how much you pay. Examples include rent, mortgage, insurance, car payment, or other loan payments. Variable expenses change, such as savings, utilities, food, transportation, gas, car maintenance, education, personal expenses, and entertainment. You may have some degree of control over how much you pay for your variable expenses. Now, let's talk about saving. And why do you think it's important to save? What kind of things do you think people might want to save for? Let's think on that for a second. Now, let's discuss. What are some things that people might save for? Emergencies, such as a major car repair. They might have a goal or a big purchase coming up, such as a new home, a new car, or you might just want to take a spring break or summer vacation trip. Some people also save for their education. It is very important to save, and a good rule of thumb is you should save at least 6 months of your expenses. You can save this in a rainy day savings account. Next, it's important to understand your wants from your needs. And we will identify these in order to stretch our income and to minimize our expenses as much as possible. So let's get started. A $5 cup of Starbucks coffee. Is that a want or a need? A $250 pair of Jordans. Is that a want or a need? That $300 light bill that is high for the month. Is that a want or a need? A new pair of shoes to prepare for a big interview that you have coming up next week. Is that a want or a need? Ladies, $100 to get your nails done, your toes, and your fingers. Is that a want or a need? You guys be sure to comment the answer to that one. But it is important to know your wants from your needs in order to stretch your income the most that you can and to minimize your expenses. So let's recap what we have discussed so far. First, we talked about your relationship with money. It is important to establish that clarity. Next, we discussed income, the two types of income, gross and net income. Fast forward, we moved along to the expenses, fixed expenses versus your variable expenses, along with knowing your wants from your needs in order to stretch your income and minimize your expenses. Let's move right along to ways to grow your money. And we can all agree, we want to see our money grow. Making regular payments to yourself first, even in small amounts, adds up over time. The amount your money grows depends on the interest earned and the amount of time you leave it in the account. Here's how interest works. Let's say you have $1,000 stashed away under your mattress for 1 year. How much will you have a year later? The answer is still just $1,000. Or if it's lost, stolen, or otherwise destroyed, it could be zero. Your mattress is not paying you interest. However, if you put that $1,000 in a savings account for 1 year and don't touch it, the bank will pay you interest. Even if the bank pays 0.5% in interest, you will have $1,005. That's your $1,000 plus $5 in interest at the end of the year. Interest is basically free money, so choose your accounts wisely. So let's review. A savings account makes sense for you because you make money by earning interest. The bank pays you for the opportunity to use your money. Your money is safe and you have easy access to it. Here are several ways to save money. When you get paid, put a portion in your savings. Direct deposit or automatic transfer makes it easy. Save at least part of any cash gift you receive. Save your change and deposit it into your savings account monthly. Save your income tax refund. Creating a personal savings goal and action plan can provide a roadmap for successful saving. Use your own experience. What can you do this week to begin to save? Even drinking less soda can add up to savings. And saving $1 a day adds up to $365 by the end of the year. What can you do next month to save? You may be able to channel money into savings by cutting costs on those wants versus needs. What can you do by the end of the year to save? You could pay off a loan and continue making those payments into your savings account. Or if you get a raise at work, you have been living without that money. Sock the extra away and make yourself a saver. There are countless numbers of decisions we have to make in life. We have to decide where to work, which home to buy, who to marry, and where to bank. Picking a bank isn't as stressful as picking a mate or a house, but it's not easy. Parking your cash in the wrong place can cost you. So before committing to opening an account, consider these tips to ensure you are making the right choice. Number 1, identify the type of account you need. Banks offer many different types of products and services. Try to compare all of them at once could seem overwhelming. A good place to start is to decide what type of account you may want to open based on your financial goals and priorities. Number 2, focus on the numbers. Why would you waste your money? Find a bank that doesn't have unnecessary charges. Why would you pay $30 a month for a checking account if you are a student? Many banks have free checking accounts for students, and some have accounts where you can waive the monthly fee as long as you have a direct deposit going into it. Make sure you consider these factors when you are searching for your checking account. Fees that you will want to watch out for are monthly maintenance fees, ATM fees, and the cost of covering an overdraft to your checking account. Some other things that you might want to consider doing is signing up for low balance alerts. This way, you can receive a text notification or email if your account balance gets too low. Number 3, think about accessibility. Most consumers want to take into account the ATM location for convenience, the branch location convenience, and the availability of online and mobile banking. These factors make your account more accessible and offer more convenience. Number 4, find a bank that fits your lifestyle. The bank you choose should meet your needs. If you're an entrepreneur, you'll want a bank that can provide support as you build a business. Number 5, examine mobile features. Most banks offer basic services through their mobile and online channel. This way, you can have assistance when it comes to transferring funds, paying bills, checking your balances, and making mobile check deposits. You want to check to see if all these services are available at the bank you are considering. Last, understanding terms and conditions. You shouldn't open a bank account without knowing what's in the fine print. If there are monthly service fees, ask whether you can get them waived. If there are out-of-network ATM charges, find out whether the bank offers refunds. When it comes down to picking a bank, you definitely want to do your homework to make sure you're getting the right fit for you. Contracts. This is simple. Read, and read. Ask questions and know what you're getting yourself into, because once you sign, that is a legal binding document. When it comes to credit reporting, there are a few things that you can do to set up for success and to create a brighter future for yourself. Number 1, pay your bills on time. 2, get credit for making utility and cell phone payments on time. 3, pay off debt and keep balances low on credit cards and other revolving credits. Apply for and open new credit accounts only as needed. Don't close any unused credit cards. Don't apply for too much new credit, resulting in multiple inquiries. Dispute any inaccurate information that is on your credit report. Insurance is simply payment of loss and can apply to pretty much anything, such as your home, your family, assets such as your phone, your television, and various other items. It's important to protect yourself from potential loss by having insurance. So there you have it, Financial Fundamentals with KT. I hope you enjoyed and plan on applying the knowledge you have acquired. If you have any questions, feel free to drop a comment below. And don't forget to like, subscribe, and share with a friend. This has been Life with KT. Peace.